Welcome to Oxford Analytica's weekly outlook on the global political economy. I'm Tom Wales, Deputy Director of Analysis, and I'm joined today by Dr. Megha Kumar, who looks after OA's analysis of South Asia, although she's also the head of our Asian desk in general. Now, Megha, the last time we were here, you predicted, despite market expectations to the contrary, that the Indian government could well get its act together and pass some kind of liberalization reforms of the sort that the foreign investment community was looking for. And it has. Something has finally happened.
Indeed. Although I think you said something interesting that I'd like to pick on. The government has indeed passed a raft of reforms, including FDI and multi-brand retail and reduced fuel subsidies. But what, interestingly, it hasn't done is to get its act together, which are, two different things. Because if you see with regard to fuel subsidies, for example, now the government has demonstrated that it is willing to cut down its fiscal deficit. However, politics is never far behind when controversial reforms such as this go through. So you've seen, among other things, Congress-ruled state governments saying that they are going to reinstate some of the subsidies. And the most controversial issue, of course, is multi-brand retail, where the Congress at the national level has seen its main coalition ally walk out. And even though the government continues to stick by its reform on multi-brand retail, what it hasn't sufficiently done so far is to address some of the genuine concerns that the opponents of the reform have raised. And those concerns, indeed, are not unique to India at all. We were talking earlier, they're shared by not just the United States, but all sort of emerging economies in Latin America and in parts of Africa too. And those concerns include the impact on employment in a country that has an extremely large but underemployed labor force, and also issues about the efficiency of supply chains. The Indian economy is, as far as agriculture is concerned, is dominated by small farmers. So, investing in making the supply chain more efficient and bringing down consumer prices is not that easy, because the intermediaries will be hard to get rid of because the farmers are very small and their holdings are small. Also because the infrastructure between different states is still grossly inadequate. So these genuine concerns have not been addressed so far.
Well, let's talk about these, moving on, setting the concerns, the legitimate concerns aside for a minute. How committed to these reforms do we think the government is, given, as you say, that it's already lost one particularly significant coalition partner as a result? Yeah,
I think that is, in a way, the most important question that is worrying not just the political class within India, but also foreign investors. Now, in order to understand whether or not the elite is committed to this, you have to look at state politics, which is where the dynamics of the multi-brand retail is situated. In the next 12 to 18 months, you have elections in at least 9 states, out of which 4 are BJP ruled. BJP is the main opposition party. Now, it is in their interest right now to oppose the multi-brand retail reform, because this party continues to draw its main vote base from small traders who are opposed to the reform. But at the national level, back in 2002, when the BJP was in power, it actually supported the reform, and the national government, and indeed Prime Minister Manmohan Singh, opposed it. So I think that over the next 12 to 18 months at least, policy about multi-brand retail is going to stay in flux. And we need to wait for these main state elections to be over, especially in Gujarat, Karnataka and Madhya Pradesh, to see whether or not the state governments change their views on it. So the policy is going to be in flux, but it seems to me that the overall trend in India is towards liberalization.
So if you were a major foreign investor, like, say, Walmart, what would your prospects be looking at this apparently uncertain landscape? Could you say to yourself, well, we may not be able to move everywhere at once, but perhaps we can pick and choose our opportunity in opportunities in certain states?
But I think that's exactly what they're doing. Already Bharti and Walmart, which have a joint venture, have said that they're going to open 6 more stores. You see, FDI, 100% FDI is already allowed in the wholesale trade segment. And 51% FDI is allowed in single brand retail.
Right.
So companies such as Mango and Body Shop are in India already. With regard to multi-brand retail, I think companies such as Walmart will be compelled to take an incremental approach. They have to wait for the state politics to line up in the next 18 months. Also, they have to see whether or not these pro-investment governments also have adequate land liberalization policies, because you need those kinds of policies. So in a way, you sort of have to line up the dominoes. So do you have a liberalized land market? Are you opposed to multi-brand retail, or are you willing to allow up to 51%? Whether or not there is sufficient infrastructure to enable any operation to succeed. So, you'll have to sort of, in a way, prepare a checklist of all the requirements and then tick them off one by one.
Well, there you have it, ladies and gentlemen. The number one virtue, I guess, for foreign investors, at least in the medium term in India, is going to have to be patience and persistence. But thank you for joining us once again. I'm Tom Wales with Dr. Megha Kumar. Please join us again next week for another look at the global political economy.